Hello students, you are the future chartered accountants of India. Welcome to our YouTube channel, our YouTube classes, Abhi CA Classes. This is CA Abhijith Acharya. Welcome for today's classes. We were discussing about the first part, that is salary, income from salary. We were discussing about the statement of salary. We have discussed till note number 10. Okay, now we are going to discuss the continue part, the remaining parts of this chapter. The note number 11 says that VRS, that is voluntary retirement scheme, it also provides an exemptions under section 1010C. Okay, the lower of the following will be exempt from income tax act. What is that? First one, salary per month, which means salary per month is equal to basic plus DAT, that means DA only in terms, plus turnover commission, that forms a part of your base salary per month, okay, into 3 months into number of years of completion of your services, okay. But remember that fraction should be ignored, where the same concept we have discussed under non-POGA Act employees, where we have discussed the same concept, fraction should be ignored. For example, 32 years and 7 months means only 32 years. We should ignore 7 months, okay. Super. Next category, salary per month into number of remaining months of service. Because voluntary retirement scheme means you are willing to retire on earlier basis, right? So hence number of remaining months of services, that we have to check the months. For example, you have let's say your maximum cap of services is 60 years, but you have retired on the age of 55. That means the remaining months means 5 years into 12 months. That means 60 months into salary per month. Okay. Next, actual amount received by the way of VRS. Okay. Next, statutory limit of 5 lakh. There is a cap of 5 lakh. So whichever is less will be the exempt amount. Okay. Super. Next, note number 12. Retrenchment compensation. Retrenchment compensation means the company will pay the retrenchment compensation if it wants to fire off one of the employees. Okay, it is called retrenchment compensation. For that also exempt under section 1010B will be there. The first, whichever is lower. First one is compensation as per Industrial Disputes Act, that says 15/26. The same concept we have discussed under POGA Act, right? Into average salary of last 3 months. Okay, average salary includes basic plus DAT plus turnover commission. Okay, DAT means only the retirement benefits cut DA. That is equal to salary. So you have to add that to take the average of 3 months. Okay, into number of years of completion of services. If then here the fraction is allowed. For example, 32.7 years means you have to take it as 33 years. Okay, 15/26 into average salary of last 3 months into number of years of completion of services. Okay, or statutory limit of 5 lakh, whichever is lower. Okay, then note number 9. There are some categories allowances will also be given to employees, and simultaneously there will be an exemptions provided for the allowances. Okay, first one, now discuss any special component. I will just read out. You can simply read out and keep it in mind in your examination. It will be asked in your MCQ part also and descriptive parts also. Any special compensatory allowances in the nature of special compensatory hilly areas allowances or high altitude allowances, uncongenial climate allowances, snowbound area, or avalanche allowances, extent to which allowances is exempt up to 800 of or 300 per month depending upon the specified location, or 7,000 per month in CHN area of Jammu Kashmir. If you have been working there, then 7,000 per month will be the maximum cap of exemptions in terms of your for your allowances. Okay, next up, any special compensatory allowances in the area of border area. If you are a soldier like that, border area, remote locality, and difficult area or disturbed area, etc., then the maximum allowances will be, that exemption will be 1,300 or 1,100 or 1,050 or 750 or 300. per month, depending upon the specified location. It will be given in your question, so that there will be no much tension about with regard to the same. Okay. Next, special compensatory tribal areas, scheduled areas, agency areas, allowances 200 per month. Up to 200, you will get that exemption. Okay. Next, fourth one, any allowances granted to an employee working in any transport system, for example, bus driver, bus conductor, that's it, to meet his personal expenditure during his duty performed in the course of running such a transport from one place to another, and provided that the employee is not in the receipt of daily allowances. That employee should not receive the daily allowances. In that case, that bus transport transport allowances people will be able to get that exemption to the extent of 70% of such allowances, up to a maximum of 10,000 per month. Okay. For example, 20,000 is your allowances, and 70% of 20,000 means 14,000, right? Or 10,000 per month, whichever is lower. That is, in this case, 10,000 per month will be the maximum exemption will be given. Okay. Next, children education allowances. For that, children education allowances 100 per month per child, up to a maximum of 2 children. If you are okay, for children also, children education allowance will be there, but maximum cap is 100 per month, maximum 2 children, for example 200 per month, that's it. Okay. Next, any allowances granted to an employee to meet the hostel expenditure on his child hostel allowances 300 per month per child, up to a maximum of 2 children, that means 600 per month, that's it, maximum cap. Next, compensatory, this you have to read out. Compensatory field area allowances 2,600 per month. Next, compensatory modified field areas allowances and 1,000 per month. Any special allowances in the nature of counter insurgency allowances forces granted to members of the armed forces operating in any areas away from their permanent location, then 3,900 per month is the allowances exemption. Underground allowances, there will be mining employees, there will be employees under mining activities. For them also, the 800 per month will be given. Next, any special allowances in the nature of high altitude allowances granted to a member of all armed forces operating in high altitude areas. For them also the same concept. Then for altitude of 9,000 to 15,000 feet, for the allowances will 1,060 per month. About 15,000 feet from the sea level, then 1,600 per month will be the exemption amount. Okay. Any special allowances in the nature of special compensatory highly active field area granted to the members of armed forces, then 4,200 per month is the allowances. Any special allowances in the nature of island duty granted to the member of armed forces in the Andaman Nicobar and Lakshadweep group of islands. 3,250 per month will be the maximum allowances that will be given to the armed forces employees. Okay. This is the list of allowances that has been prescribed under our Income Tax Act 1961. Out of this, the main two will be, I think, important will be that children education allowances, maximum 100 per month, and a hostel expenditure allowances, that is 300 per month. Sometimes they may ask for transport employees, transport agency employees, 70% of the actual allowances, or 10,000, whichever is lower, and in like that, and others you can just read out. Okay. Next, 14th statement of 14th point, 14th note, that is commutation, 14th allowances. Okay. Commutation or transport allowances, office to gar and house to office, only for these purposes it will be granted only for in case of blind, deaf and dumb or handicapped employees, only it will be given. If it is the transport allowances is given for other employees, then this exemption will not be sanctioned. Okay. It will be given only for handicapped, blind, deaf or dumb employees only. Maximum cap is 3,200 per month. Okay. Next, 15 to 20 is there, no, the traveling allowances, conveyance allowances, uniform allowances, daily allowances, helper allowances, research allowances, and or academy allowances. Then the exemption will be actual amount spent. If you provide the actual amount spent invoice to the employer, then those that up to that a portion, there will be an exemption. Okay, traveling allowances, conveyance allowances, uniform allowances, daily allowances, helper allowances, and research allowances, academic allowances. For that, actual amount spent will be the maximum amount of exemption. Okay, simple. This is terms of allowances. Then, but the following allowances are exempt only under normal tax regime. This means following three are not eligible under new tax regime, right? 114 BAC. What are those? Which are those? Allowances to Supreme Court and High Court judges. Allowances given to the judges of Supreme Court and High Court. Then allowances received from United Nations Organization, UNO in short. Then sumptuary allowances. Okay, if you have been given in the question that these three allowances, then you will be exempt only for old tax regime, normal tax regime. For new 115 BAC employees, this will not be given. Okay. Next, 21th note. Okay, that's for 21th allowances. That is HRA. House rent allowances. Okay, some employees will get the house rent allowance. That is called HRA. Okay, but what is the exemption portion? That is specified under section 10, subsection 13A. The list of the following: 40% or 50% of salary. Where 40% or 50% will be applicable? We'll see. 50% of salary will be applicable if that employee is residing in metro cities. Metro cities means 4 of the states: Mumbai, Delhi, and Chennai or Kolkata. If the employees are residing in those 4 states places, then that 50% of the salary will be given as exemption will be given. Number first, not entire 50%. Which of the list will be, we have to see. Okay, 40% in case any other states apart from these Mumbai, Delhi, Chennai, Kolkata. If the employees are residing in Karnataka, then the 40% of salary will be given. If the employee is situated in Telangana, then 40% of the salary will be given as an exemption for HRA. Next, actual amount received as HRA from the employer or actual rent paid by the employees minus 10% of the salary. What do you mean by salary? Which will part a form of the salary means basic salary plus DA in terms, only the retirement benefit plus the turnover commission. That is a salary. First 40% or 50% of the salary or actual amount received by way of HRA by the employer or actual rent paid by employee in terms of his residing houses wherever he resides, minus 10% of salary, basic DAT plus turnover commission, whichever is lower will be granted as an exemption for that employee. Okay, super. Next, 22nd allowances. All other allowances other than specified above are fully taxable. Okay, no exemption will be given. Super. Note number 10, Provident Fund. Statutory Provident. There will be 4 classes of Provident Fund. One thing: Statutory Provident Fund, Recognized Provident Fund, Unrecognized Provident Fund. Sorry, 3 parts of Provident Fund will be there. First one, we'll discuss the Statutory Provident Fund. If the interest is receiving in terms of your SPF, that is Statutory Provident Fund account, then that is fully exempt in the hands of employees. Then employer's contribution to your SPF account, that is also exempt. Okay, but your contribution, it is like a PPF. PPF is public provident. It is like an investment. Okay, SPF is like an investment. The interest is an income for you. That is will be exempt. Employee's contribution also your income, but it is fully exempt. Why your income? Because he is contributing. That employer is contributing on behalf of you, but you are also contributing. Okay, but your contribution is not at all an income, right? It is your investment. So you can take that investment under as a deduction under section 80C. The same concept we will discuss in the deduction chapter. Okay, keep in remember as of now. But that is not an income, so you will be ignored in the for the salary chapter. But it can be taken as a deduction, which we will discuss, which we are going to discuss under deduction chapter. Then lump sum amount. After the maturity, lump sum amount if you receive as an employee on the time of retirement, then at the time of retirement, okay, not at a mature. at the time of retirement, then that is also fully exempt under section 10(11). Super benefit, right? Interest income exempt, employees contribution exempt, employees contribution deductions also available, not an income, and a lump sum amount at the time of retirement, that's also exempt. Super. Next, recognized provident fund, RPF in short. Interest is exempt. That interest income will be exempt up to the rate of 9.5% per annum. For example, that RPF is providing you an interest of 10%. 0.5% will be taxable, 9.5% will be exempt. That means, okay. Next, employer's contribution to your account will be exempt only to the up to 12% of the salary. For example, your salary is 1 lakh. Up to 12% that employer can contribute. He can contribute at whatever amount, but exempt will be given to the extent of 12% of the actual amount of the salary. Salary means basic DAT plus turnover commission. In most of the cases, salary definition is same. So basic plus DAT plus turnover commission. In some of the exceptional cases, there will be difference. DAT, DA both. Okay. 12% of the salary. In that case, 12,000 up to 12,000 of employer contribution is exempt. Okay. Next, employees contribution, it is not an at all income, but it will be claimed as a deduction under section 80C, which we will discuss in the deduction chapter. The lump sum amount which you will get as an employee on the time of retirement, it's also an exempt under section 10 subsection 12. Super. In SPF, all are exempt. Every benefit will be given to you. In recognized provident will be given to you. Exemption will be given to you based on some exception, some limit. 9.5% of the interest, 12% of the salary of the employer's contribution. That's it. But there is one concept. Lumps. That's note. Lump sum amount received from RPF. This only we are talking of RPF because SPF is fully exempt. Lump sum amount. Here, a lump sum amount received from RPF is also exempt under section 10 subsection 12 if E means employee has rendered services of 5 years or more. That employee should serve that organization for at least 5 years. Then only that exemption will be given for the lump sum amount receiving at the time of retirement. If employee rendered services less than 5 years, then exemption allotted earlier will be withdrawn. Okay, will be withdrawn. I will once again tell. If employee rendered services less than 5 years, then the exemption allowed for employer's contribution, that is 12%, and interest amount, interest exemption up to 9.5%. Will be withdrawn now at the time of retirement. That means that those are the previous, those are the exemption portion that had been given during his tenure will be withdrawn at the time of retirement. Those balances will be taxable at the time of retirement. That's it. Super. Next, however, if the following 3 conditions are satisfied, even though the employee has served within 5 years, then also that exemption will not be withdrawn. That means the exemption allowed for in terms of interest and employer's contribution will not be withdrawn if the employee has satisfied any of the following conditions. Because these 3 categories are uncontrollable in nature. Okay. First one, employee retired due to ill health. If the employee has not served an organization due to his ill health, okay, then he has to leave his organization. And hence he is working. He was working for less than 5 years. Next, employee retired due to the shutdown of employer's business. That employer's business, the company had been shut down. Then he had to serve less than 5 years, right? Okay. Next, employee has retired with the instruction that he has given an instruction that his balance in RPF should be transferred to, that is NPS, the Section 80 CCT, National Pension Scheme. His balance should be transferred to NPS. That instruction, if he has given to the employer, then that also will not be, that exemption portion will not be withdrawn once again. Okay. So he should serve for at least 5 years. If he has not served for 5 years, then exemption given earlier will be withdrawn at the time of retirement. However, following three cases, that exemption will not be withdrawn even though he has served for less than 5 years. Number 1, ill health. Second, shutdown. Third, instruction to transfer his RPF account to NPS. Okay, super. But amendment has been brought to effect under by Finance Act 2021. Very important from your exam point of view. Interest on employees' contribution. We are talking about employees' contribution towards SPF or RPF, Statutory Provident Fund, as well as RPF, that is recognized Provident Fund. Okay, first one, exemption under section 10(11), that is SPF, or 10(12), that is RPF, is not available for interest accrued during the previous year to the extent it relates to the contribution made by the pensioner or employee exceeds 2,50,000 in any previous year in that fund or after 1st for 2021. That means, in short, if an employee has contributed by himself more than 2.5 lakh in any year, then excess contributions ka interest, then interest of excess contribution. For example, he has contributed 5 lakh in a one financial year. Up to 2.5 lakh interest will be exempt. Okay, accumulated interest. Remaining 2.5 lakh interest, whatever may be the interest, we have to do proportionately. For example, interest is 10,000 for 5 lakh. That means 10,000 for how much for 2.5 lakh, how much for 2.5 lakh. That means simple. 5,000 for 2.5 lakh, 5,000 for 2.5 lakh. That 5,000 for excess 2.5 lakh will be taxed in his hand. Okay, that's a simple task. Next, if in that fund employer is not made any contribution, then higher limit would be 5 lakh. Would be applicable. Okay, if for that fund, if employer is not contributed any of the fund, only employee is contributing, then the maximum cap will be 5 lakh. In my example, for example, if you take he has contributed 7 lakh. Okay, the interest is 20,000, let's say. Then 20 how much for 2 lakh, how much for 5 lakh, we have to check. How much for 2 lakh, how we can do 2 lakh divided by 7 lakh into that interest portion, that will be taxed. Okay, this is an excess portion that he has contributed. Even when there is no contribution made by that employer. Okay, simple. Next, it may be noted that interest accrued on contribution to such funds up to 31st March 2021 would be exempt without any limit, even if the actual income is after that date. Okay, that the balance up to 31st March 2021 will also always be exempt. Because it has been brought to India, brought to effect from April 2021. So whatever, because there is no, there was no threshold limit, right, at that point of time. So up to the March limit, up to the March 2021 balance, there will be an exempt. After 1st April 2021, if you contribute more than 2.5 lakh or more than 5 lakh, as the case may be, that this rule is being applicable. Okay, super. Next, unrecognized provident fund, URPF. Okay, URPF, what is unrecognized provident fund? Interest is receiving during the during his tenure or during his services will be exempt. Employer's contribution is also exempt. Okay, employee's contribution, that ATC benefit will not be given. Only for SPF and RPF that ATC benefit will be given. Okay, for employer unrecognized provident fund employees contribution, the ATC will not be given. Okay, but the lump sum amount received at the time of retirement, then for example 10 lakh is a lump sum amount. Out of that, employees contribution portion how much, interest on employees contribution how much, employers contribution how much, interest on employers contribution how much, we have to categorize that. We can ask that employer, that person regulating that provident fund. Okay, how much is the employee contribution, we should ignore, because it is not at all, because it has not came to point, because we have already ignored at the time of its contribution. So amount received to his extent will be and will not be make any difference. Okay, but interest on employees contribution is taxable under income from other sources. It is like your bank interest, that's it. Interest on employees contribution will be taxed under income from other sources, not to be taxed under income from salary. How much is the employer contribution as well as interest on employer's contribution will be taxed under head of salary at the time of retirement. Okay, Super. Employees contribution, ignore. Interest on employees contribution, IFOS. Employers contribution as well as interest on employees contribution will be taxed under salary. Okay, simple. Next, employers contribution to NPS account would form a part of salary under section of employees under section 17 subsection 1. Okay, CG's contribution, this we have just mentioned. Central government's contribution to Agniveer Corporate Fund account would also be form a part of salary under section 17 subsection 1. Okay, simple. Next, note number 14, perquisites specified under section 17 subsection 2. This means additional benefit offered by employer to the employees. It may be monetary or non-monetary cases. What is the difference between allowances and perquisites? Allowances means it's a monthly fixed amount received by employee from employer, whether actual expenditure is incurred or not. It's a form of salary. For example, HRA. Okay, perquisites means benefits or facility provided by employer. It is received when actual expenditure is incurred. For example, car facility. There should be an incurrence of that actual expenditure. Then only that perquisites will be taxed. Okay, this is a brief discrimination between differences between allowances or perquisites. First, we will discuss the leave travel concession. Okay, leave travel concession means employer may give you an opportunity to travel during the for leave travel for abroad for any other purpose. Okay, in that case, the exempt under section 10(5) will be there. If you travel by air, if the employees travel by air, then exempt portion will be actual expenditure or economic class fare. There will be actually in airport, if you go by flight, there will be classes, there will be categorized as the seat will be categorized as economic class fare. Simple. Actual expenditure or economic class fee, whichever is lower, will be the exempt portion in case if you travel by air. If you travel by any other mode, for example, railway facilities available, then exempt portion will be actual expenditure or first class railway account fare, whichever is lower. Okay, then if railway facility is not available for your destination, for your journey, then the exempt portion will be categorized again to a recognized transport facility available. If there is a recognized transport facility is available, then bus will be there. Exempt will be actual expenditure or deluxe class bus fare. There will be deluxe class bus fare, whichever is lower will be the exempt portion. If you try, exempt portion means that employer will give you, right, that's bus fare or actual expenditure fees reimbursement will be there. No, that will be exempt. Okay. Next, recognized transport facility is not there for your destination based journey, then exempt portion will be actual expenditure or first class railway fare of similar distance. Similar distance ka how much first class railway fees will be there, fare will be there, that we have to take. Whichever is lower will be the exempt portion. Okay, super. If you travel by air, actual expenditure, economic class fee, whichever is lower. Other than travel air, railway facility available, then actual fare or first class railway account fare, whichever is lower. Not available, then the transport facility, other transport facility available, actual expenditure or deluxe class fare, bus fare, whichever is lower. If recognized transport facility is also not available, then actual expenditure or first class railway fare of similar distance, whichever is lower, should be taken. Super. Next, some key points to be kept in mind. LTC exemption, that is a leave travel concession exemption, is available for the travel of employee, his spouse, her spouse, children, dependent relative. Dependent relative means mother, father of the employee, mother, father, brother, sister of the employee. They should be dependent. Exemption of LTC is available for maximum of 2 children only, born or after 1st October 1998. Okay. Exemption of LTC is available only for 2 children born on or after 1st 1998. Okay, only for 2 children. They should born on or after 1st 10 to the 1998. Okay, we'll discuss two cases. First case, there will be first time first child is born. The second time twins have been born. Then maximum three children, that LTC exemption will be given, because second time it is uncontrollable, right? First time okay, second time twins, then the maximum of three children exemption will be given. Second case, if you have a twins at the first time, second time if you have one child, then a maximum of only two children, that exemption will be given, because in that case it is controllable, right? And hence only for one children, two children, then maximum exemption will be given. For another children you have to bear on your own. Okay, super. Next, LTC exemption is available for 2 years during the block of 4 years. There will be block. Current block is 20 to 25. Out of these 4 years, you can travel, you can avail the benefit of LTC exemption only for 2 times only. If any unutilized LTC will be available during the last block period, that is to 1821, then that excess only of one unavailed LTC can be carried forward in this block. Then there will be three LTC available exemption will be given to you. One is for carry forward, two is for this current block here. Okay, super. Till now we have discussed the perquisites as perquisite chapter. As we have not discussed the entire perquisites. We have discussed up to LTC. In the next part, we will discuss the remaining parts of this chapter. Okay, till then stay tuned, stay revise as many times as you can, because revise you make a that is practice makes the man perfect. You have heard that. So till then, see you all and have a good day. Signing off. CA Abhijith Acharya, Abhi CA Classes. Bye bye.